to bring on Oliver Sloup of Blue Line Futures and talk about our market action here today. Oliver, thank you for allowing us to talk with you here on what's a very busy day. I'm sure you're probably getting all kinds of phone calls out there today about what's going on in the overall market realm.
Yeah, absolutely. And a lot of it started over the weekend before the markets even opened last night. And one of the notes that we added in our daily morning commentary was expect the volatility. That volatility is going to lead to some unexplainable intraday price swings. And I think we're already seeing that in a lot of markets here earlier this morning. We've got crude oil at one point, it was down $4. We're about $2.50 off those lows right now. So you're seeing the volatility increase. And oftentimes that invites more volatility into the markets. Now, when looking at some of the levels that we need to keep an eye on for some of these grain markets, 620 for that corn market is going to be a big one. That's where we broke down from last Thursday. The bulls need to get out above here to really, repair some of the damage that has been done over the last couple of weeks. And what might be the catalyst and a risk-off trade to get corn out above there would be deleveraging in the wheat market. We assume that the funds have a fairly large net short position in wheat, so a risk-off trade there would be actually the shorts buying back positions that could potentially take corn with it.
All right, so let's take a look at what we have going on for our current trade, shall we? With our quotes provided by bar chart. So we'll go to the corn, and if you remember, we were lower overnight, opened higher this morning, and then flipped back lower again. It almost makes you dizzy. It chops around on both sides of unchanged here today. May corn down 2 now at 6.15 1/4. December unchanged at 5.57 3/4. It's saying, what the heck? I don't know what to do here on December. On soybeans, we have May down 2 3/4 cents at 15.04 1/4, but that doesn't tell the whole story. It's actually kind of in the middle of its trading range, and that trading range is running about 21 cents wide here. Let's look at the July contract. We're down 2 3/4 cents there. On the new crop November soybeans so far this morning, we're down 8 cents right now at 13.49 1/2. Now, as we jump over to the Chicago May wheat, we now have May trading 9 higher at 6.88 1/4. When we came in this morning, it was lower. So go figure. On Kansas City wheat, you have the May contract 4 1/4 higher at 8.02 1/2, even though they have been talking about prospects of moisture in the southern plains. Minneapolis wheat, the May contract now up 11 at 8.35 1/2, and we're off of our earlier low this morning by nearly 20 cents already. Crazy day. The cotton market, you have July up 236 points at 81.30 per pound, and the new crop December up 186 at 82.11. So big gyrations going on in the cotton market too. What about this wheat trade here, Oliver? For the longest time, it just seemed like there was no bottom to this market in the wheat, and now today all of a sudden it's firming up a little bit when you would think it was bearish news with the moisture in the forecast.
Right. Well, and again, I think a lot of this is just outside money flow and kind of deleveraging and reducing risk through the fund's portfolio. You look at wheat, you look at cotton, which you had mentioned was up big. You look at something like natural gas. These are all markets where funds are assumed to be rather net short. And so to deleverage or reduce exposure and risk to the markets, they're buying those positions back. And those three markets that I had touched on have just been walloped over the last several months. And so I think some of that deleveraging is certainly adding a little bit of a headwind right here as we see a short covering rally to start the week.
Okay.